today. I found a few moments. I'm going to squeeze in a video. We are on chapter 10 of the Handbook for Catholic Moms group that summer book club we're doing this summer. And chapter 10 was all about finances and budgeting. Before I get on the bandwagon about that, I just want to make sure that you know this is a collab with other Catholic YouTubers here on YouTube. Heather at A Catholic Mom's Life is the one who kind of corralled us all together and started this thing, so make sure that you go check out her channel and then check out the other ladies as well. Everyone has a great, unique perspective, and if you are just now finding me, make sure you check out all the other videos. They're all in a playlist, and they're all just all sorts of different topics that are covered in this book. Okay, I have a couple of things that I really want to share about finances and being a stay-at-home mom. The first one is that every mother needs life insurance. Now, this was sort of kind of covered in a different topic, a different chapter, and I can't remember what it was, but I have wanted to say this on my channel for quite a while now, and I'm getting the opportunity. You ladies, you need life insurance on you. From what I have been able to gather, you can get as much life insurance on you as your husband has on him. He is supposed to have 10 to 12 times his income. So if he's making $50,000, you need at least $500,000 in life insurance. Now, if you're young and don't have medical problems, this does not cost that much. I have $400,000 of life insurance on me. It's $188 a year. This is for 20 years term life. You don't need life insurance forever, but you do need life insurance while your children are in the home. Because ladies, if something happened to you and you died, your husband needs to be able to pick up the pieces, and you are worth a lot. There's some study out there, I'll try to see if I can find it and put it below, where, it's like a stay-at-home mom is at least worth $100,000 a year. I tried to argue with the insurance company that I was worth that and I wanted $1 million of insurance, and they would not give it to me. They would only give me as much as my husband has. And since we're in the military, we take out the full $400,000 on him. Now, the way I found out about this is through Dave Ramsey, and the system I used was Xander's Insurance, where you go to Xander Insurance and you just plug in a couple things and it'll come up with different quotes from different companies. Then after that, you apply online to whichever one is the best rate or whichever one you want to go with. I think I have American General. They will ultimately send out a nurse to do your blood work. If everything comes back normal, you get your seal approval and you get your life insurance. But I just have to say that once you have your life insurance in place, I know that I sleep a lot better knowing that Brian and I both have life insurance. If we were both to die in a plane crash, someone would get $800,000 of life insurance to provide for my kids, to help them, go to college, to help them have down payments for their homes, to help whoever is caring for them, provide for them, because kids are expensive. And I can't say enough about getting life insurance. So if you are on the fence, please go to xanderinsurance.com and just, type in like your info, see how much it is. Please don't get $100,000. The whole point is you really need enough. Ideally, the way Dave Ramsey puts it is that you want enough life insurance so that you could invest it and live on the dividend. So you could continue to be a stay-at-home mom. So if your husband makes $100,000 a year, you want $1 million on him, and you should be able to get that much. And then if he were to die, I'm sorry, this is morbid, I guess, but really it's just planning, and the lawyer in me is just like, you guys need a plan. If he were to pass away, then, you could pay for the funeral, you could pay off any debt you have, and then you hopefully smartly invest it, and that money will make money every year. And Dave Ramsey, the way he divides out his investments into the 4 categories, you really do see an average of about 10 to 12%. So he's not lying when he gives a 12% number. It's of course over time, and you have to stay in the market, and that's a whole other subject. But if you want to know more, I really suggest checking out Dave Ramsey's site. He is, I know this is a Catholic moms group, and he is an evangelist, I think. I don't know, he's some kind of Protestant. His information about life insurance and just in general kind of tackling, like the Total Money Makeover book, if you haven't read it, it is a game changer. It will make you never want to get a car loan or any kind of loan again. Cut up those credit cards, you don't need them. And I really do love Dave Ramsey's message. So, the other thing though is Lisa Hendy found a Catholic, I think it's like a Catholic Dave Ramsey. And she said there's a book in here where is it? 7 Steps to Becoming Financially Free, a Catholic Guide to Managing Your Money by Phil Lenahan. And he actually says that there are churches that are doing Phil Lenahan programs. I have never heard of the guy, so I'm gonna have to look up like what he says and if it's any different than Dave Ramsey. I do think that most other financial advisors are going to suggest you play the credit score game, and I really love how Dave Ramsey says, no, don't play the credit score game. The second thing I want to talk about is money and kids. Now, in our home, we do not do allowances. Like, you do not get money unless it is a gift for a birthday or something, or you earn it. Because I really do believe that, you know, you work to earn money, right? Dave Ramsey has a kid, like, kit. And it comes with 6 books, a give, save, spend bank, some envelopes for give, save, spend, and a tour chart. And you can put in like how much each tour, you know, is worth, and then you total it up at the end and you pay them ideally every Sunday. Now, my daughter never marks her tours off, so she doesn't get paid. It's kind of like if you don't check, you know, you don't punch your card, you don't get paid. So she doesn't make much money right now. I had to kind of remind her, like, hey, did you do that today? Do you maybe want to mark it off? But she isn't a huge money person anyway. Like, she really enjoys the Dave Ramsey books, and she understands that, like, debt is a 4-letter word. But she just is kind of lackadaisical about whether she's actually going to want to be paid or not. I guess she doesn't really want much, which is nice. My son, he's 4, and we need to start actually coming up with some work to earn type stuff with him. I can see him being much more motivated because he typically has a wish list a mile long about like toys and other things that he wants. If you have kids, I really suggest the Dave Ramsey kit, and he has a Smart Money, Smart Kids book, and it talks about all the way from itty bitty kids and, like, you know, them picking up their toys and you handing them $1, kind of like to see that work for money relationship, all the way up through college kids and, you know, saving for cars and, you know, and college and all that kind of stuff. So that book is amazing. I highly suggest that book as well. I will link everything below. I am not the best person with money. I am not the best person with a budget. But what I do use is I use EveryDollar, which is Dave Ramsey's online program. And the thing that I love about EveryDollar is that you actually have to, unless you want to pay for like the transfer from the bank, you have to like put in the transactions into EveryDollar, and he wants you to zero out your budget. So a zero-based budget means that you have told every single dollar where it goes. So say you go through all your basics and you have $253.11 left over. Then you have to do something with that $253. If you want to put it all in a savings, then you put it into, you know, like a saving section. If you want to say, oh, we have an extra $100, let's put that 100 of that towards Christmas this year, and the other 150 into our you know, emergency fund. Like, you just have to name every dollar, and then as things come up in the month, you have to reallocate because you've already done a zero budget. There's no money left. And I think that's where I'm still kind of trying to figure things out. It's like something unexpected will come out, but we didn't have any extra money to put in our emergency fund, so there's something to draw out of. It can be a bit tricky. Now, I have used Mint.com in the past as well, and Mint.com is a decent site that links up with all your different accounts. Like, I can see my life, like our retirement, our very small retirement, in there. I can see all the bank accounts. You can put in like your assets, like if you own a house or you have a car, you can like type that stuff in and it kind of like does it for you. It shows you this really awful number, which is like your debt to asset ratio, and when you have student loans, it's a terrible number, and I just don't like to look at it. But anyway, that's a whole other story. But for people who are debt free, it would be a really great, amazing thing to look at. Or if you're really working the Dave Ramsey plan, or like this other guy's plan, and you really are trying to get out of credit card debt, stop, you know, using debt as your, you know, everyday kind of go-to, then Mint.com would be an amazing thing, because I do like how you can see all your accounts at once. EveryDollar is supposed to kind of replace the paper and pencil budget. So I like it for that reason. It's on my phone, it's on my husband's phone. I have yet to get him to actually put anything in it, but it's there. So what I usually do, because I'm terrible at putting things in as they come up, is I'll go to my bank and print off like the transaction list, and then I'll go in and type it out and kind of reassess things, and I try to do that once. Ideally, it's every day. On average, it's twice a month, and it should be at least once a week, really, to like check in and see how things are going. that's my money talk. There's a lot covered in here, but like I said, I just wanted to really encourage everybody to go get life insurance. I think you can just sleep a lot better. All right, guys, until next time, this is Laura from What Laura Likes. Next time I'll put makeup on or something, but it's just been kind of a chill day around here and just doing some housework, so keeping it real. I will talk to you again soon. Make sure you like, subscribe, ring the notification bell, share this video. I was doing laundry, and so I apologize. There's like stuff everywhere. All right, guys, I will talk to you again soon. Bye.